And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, futures traders, and welcome to the market forecast for Thursday, July the 21st. It's junk food day today, in case you didn't know that. But as always, our focus is on finding accurate context, good risk management, and always remaining patient. We had a lot of information come out this morning. 7:15 Central, the ECB raised rates by 50 basis points, 25 basis points more than were expected. Jobless claims came out after that. They were looking for 240,000 initial jobless claims, pretty high, pretty much higher than that. 251,000 was the actual number. Continuing jobless claims also higher. 1,340,000 was the expectation. 1,384,000 is what actually came out. One of the bigger shockers today, and it doesn't seem to be really affecting the market much, was the Philly Fed number. They were looking for a negative 2.5 after the last release of negative 3.3, and the actual number came out negative 12.3. So things slowing as far as things going on in Philadelphia and Pennsylvania. 7:45 right now is the ECB press conference, 9 o'clock this morning. Central Time, of course, looking for the misleading indicators, and then nat gas at 9:30. At 9:15, the ECB President Lagarde is going to speak. So some European information coming at us, everything that we are looking for, except for, of course, the leading indicators in nat gas already out for us this morning. This morning, looking at the markets, they were kind of mixed early trade today, but it looks like things are changing. It looks like we're going to be opening firmly in positive territory. Doesn't surprise me much. We had some decent earnings come out this morning. AT&T, Philip Morris, Union Pacific, and Blackstone all beating expectations in both categories. This afternoon, no big real earnings coming out. Capital One and Snap, none of the majors coming out after the close today. Apparently, Super Mario Draghi has resigned as Prime Minister of Italy. And crude prices tumbled last night after the president avoided the climate emergency, but also vows to use executive power, whatever that means. As always, make sure you hit the lucky like button, share, comment, question, feedback, love, heckling. They're all welcome here on the Market Forecast. And make sure you subscribe to our YouTube channel so you can get notification when we do go live. If you weren't aware, there's been a bit of exciting change here at Top Step. When you're funded, of course, that first 5,000 is 100% yours. But after that, we've gone from 80-20 split, 80 to you to 20 to us, to 90 to 10. 90% of your payouts are going to be yours. 90%. We're very excited about that, and we hope you are too. Today is Make Hogue Money Day. I'm going to put this in there so you can get registered. Join us, join me, help me make some money. I'm just going to be talking and thinking about things, and you're going to be making the decisions for me at about 8:20 till about 9:20. We'll watch the S&Ps, and we'll see if we can't make a little money. So we'll look forward to seeing you at that. VIX down a little bit this morning, of course, 23.82. The dollar index also down, making sense, right? 106.74. And the yield on the 10-year back up above 3% at 3.04%. Good morning to everybody. Charles March is the first one in the room this morning. Charles, you win the prize. Theo, good morning. Brian, good morning. Shaw, Bob Rudder, Ola, Tachyon, Brother Rick, love you. James Harris, happy Thursday to you as well. Dimitar, Patrick, Jorg Duque, good morning. Chris Johnson, Frederico, Taurus Trader. Frederico caught some of the move in gold this morning, and gold finally showing some signs of life and some opportunity, opening out of range and out of balance today. He gave a nice opening range trade, but that opening range trade was really big, so you had to find a way to limit the risk. I'm glad you had a good morning, Frederico. Taurus Trader, Jordy, Scott Sawney, Concord, Bill, good morning. Anthony, beautiful peeps, good to see you. Vince, Sarah Hall, good morning. Prayers and love to you as well. Good morning, D.A. Top Step, saying good morning. Michael Knight, Ron, JD, always good to see you, my friend. Orion, good morning. Haggle Matters, Unicus, good morning. Money is made by sitting, not trading. You got some good quotes there, Unicus. Dan Trader, good morning. Siamak, good morning. Sorry if I killed your name there. Rusty Golfer, my spirit animals with us this morning. Dr. VJ. Phil, good morning. Terry King, Brody, morning. Let's all have a patient and profitable day. Love that patience in that. Andy Bleed, good morning. Another rainy day in Colorado. We got nothing but heat and humidity and sun here in the Chicago area. Zarain Demar, good morning. Marcelo. Then I've got the link for Make Hogue Money in there. Demar, good to see you. Hopefully things are awesome for you. Jordy, yeah, it's good news on that 90-10 split. Now focus on step 2. Absolutely. Dark Heaven. George, good morning. Lacey's outside right now. But I'll tell her you said good morning. Jules, buenos dias. Trading Research, Columbus, and Joe, top of the morning to you as well. A top of the morning to you. Dimitar, good to see you. For Gold Open, do we use 8:20 or 8:30 Eastern? Well, I always look at the 8:20 Eastern, 7:20 Central as the opening range for gold. It's when the pit used to open up. It's when the volume kind of spikes up a little bit, and I believe that all of our participants are focusing on that 7:30 open as well. It's a great question, and an important question is that. David, good to see you, and good morning to you. So we're gonna go quickly into the charts this morning because we got Make Hogue Money right after the market forecast. We want to be ready and able to be engaged at 8:20, so we've got 10 minutes to kind of think about things, look at what's going on, and come up with some good trade ideas. Not me, you. You're coming up with the good trade ideas. So let's jump into the charts. All right, the E-mini S&Ps. Well, we see that the market is continuing to at least bring in some volume yesterday and a little bit in open interest. We only added 1,300 in open interest, but still, the way the market acted yesterday, it's overlapping to higher, values higher, everything's higher, and we added volume and open interest. The auction process is still representing itself as healthy, and we're seeing the market continue this move to the upside, even with the information, the economic information that we had come out, and not all of it was good. Market's still showing us that it is grinding to the upside. Volume higher, open interest higher. New York Stock Exchange volume was higher yesterday. We had an inside, and we just took out the high from yesterday's session. Before that, it was inside. Does it seem like this rally is resilient, or does it seem fragile? With the pullback we had yesterday with some bad news, the way the market digested that information and then continued to try and push to the upside, I'm feeling like this rally is a little less fragile than I initially thought. Again, adding 1,300 estimated open interest. Here's what we're looking at from the overnight. Now, I've added something to the chart if you didn't notice. I've added VWAP and the first and second standard deviation of VWAP. This is something that I've had on charts on another platform for a long time, and I decided we would introduce that into the market forecast. So VWAP is currently 39.59.10, 39.59 even for all intents and purposes. VWAP is the price where the volume is equal above and below. So we have these standard deviations of that, which can provide some decent opportunities. When we look at what we did down here, we got near that second standard deviation and price moved in the opposite direction. Something that I look at when these deviations line up with value high, value low, point of control, all of these different features of the profile, I find that the convergence or confluence of those levels on completely unrelated studies can bring some pretty decent opportunities. So we've just started to watch this. We'll watch it over time, and we'll point out opportunities as they come up or after they come up with regards to value highs and value lows. Market continuing, no real overnight inventory. We danced around, stayed inside value. We're still inside value. We did take a look above yesterday's high, seemingly, rejecting for now, but the market's not even open and we don't have all of our participants here. So I'm going to be suggesting patience while we're in range and inside of value, but with no bad news. We pretty much have most of the information that we're aware of, still waiting for misleading indicators to come out. Barring anything from there, this market is in an upside auction that is presenting as relatively healthy. I'm going to be looking for opportunities to buy weakness. With no bad news, I'm looking for this market to continue its grind to the upside. Why? Look at the amount of space we have above. We got two big down days here with no real structure to worry about. And we've got a lot of space until we get to the next level of potential upside breakout, which would be weekly kickoff high. Let's take a look at crude oil quickly here. All the stars aligned. Technically, we were in the upper extreme of the channel, or as we like to call on the recap, the Daniel. Technically, it was set to break. We had a lot of weak structure in the profiles here. We've been pointing those out. Fundamentals, well, apparently China demand is in question, and then political. We've got climate fears, and the president talking about changing whatever he's thinking about changing. So, he did not go with a climate emergency. So I think that's viewed as an easing of higher crude pricing. It certainly seems that way in the market. So here's what we were looking at. We're looking at this channel here, which kept kind of expanding to the downside. Overnight, we really didn't have too much as far as inventory is concerned until 2:30 in the morning when Europe opened up, and then Powell, we had some motion to the downside. We've got a gap here that we can fill in regular trading hours. We've got a naked point of control here that we can now fill in regular trading hours. We've got another gap below that. Maybe we're gonna start to head there. It just depends on what the traders are looking at. Okay, we are looking for a regular trading hour touch of this naked point of control would be the first thing, and then of course closing this gap. We've got a considerable amount of overnight shorts in this market. So if we don't bring in new business to the downside, there's always the possibility of a gap close back to value area special situation, play to the upside, to the downside. We know we've got a lot of visuals. And if traders are looking at the visuals, they will bring price there. Markets are very visual. Here's the first minute of trade. We are out of balance. Okay, looking at the 30, we know we've broken out. We're out of balance. We've got a gap. This would be one of those situations where the opening range may be something that we would consider doing because the market's out of balance. It might offer a bigger opportunity. We are already at 60, 70 ticks of opening range. These opening ranges in crude oil have been absolutely crazy. Crazy. 70 plus ticks. So we've got to be looking for opportunities that offer more than 70 ticks. I'm looking for 140 ticks off an opening range trade if I can get it. Here's the finish of the opening range trade, of the opening range anyways. So this is not something that I'm actually going to be doing. You would just like to watch that first minute. We may come back to see how this first minute has been treated by the open and active traders after the open. Here's the Nasdaq. Even better performance than the S&Ps. We added another 7,500 estimated open interest. More buyers in the Nasdaq, really. We had some decent volume, of course. We were looking this morning at an inside extended trading hour range. We've already pushed outside of that. It's going to be another interesting day. The suspicion that there is a paradigm shift to these equities markets starting on Tuesday is continuing to ring true. So I have to be looking for opportunities to buy breaks because the market is in an upside move and presenting as healthy. Higher volume, higher open interest. That tells me that this upside auction is for real. We have not seen for real upside auctions in the equities pretty much all year. Every upside move has proven to be hollow. We've lost open interest in them, and then we will continue the move to the downside. This is a change in personality, and I'm going to be looking to buy weakness. So here's the 30-minute chart. Really, until after the numbers came out, inside value all night long. But no real overnight inventory with which to speak of. Potential for an opening gap here from yesterday's session to today's session. I would welcome that because it gives me a little bit of reference early in the session. Opening range trades with this close to value, probably not going to be that aggressive, although we do like to test those in make hogue money. We'll make that decision in make hogue money. So again, the auction is new. It is presenting as healthy. Just there's always that caveat that if somebody does or says something stupid, it seems like we're still in the sore toe area. Is this rally fragile or is it going to be resilient? And we know how resilient equities tend to be when there's no bad news. We got to keep an eye on that. Gold. Finally, a good opportunity. The market really oversold in the overnight session. We added 4,000 on the downside move yesterday to the weekly kickoff level. Now, I'm not celebrating that there's a low in here just yet, but we were talking how the market was just dying in volume, open interest. Finally, we got a little bit of a goose in open interest, but maybe that's we've finally trapped some shorts. Here's the 30-minute chart. The opening range is the dead low. It was about 40 ticks. Pretty big opening range. There's where that trend line belongs. So we get, the market opens. Look at all this overnight inventory to the short side. We added 4,000. We continued that move to the downside. This is really typical of an overnight inventory adjustment. We got too short in the overnight. We opened. We left the opening range the low of the session, and we have this big move back into the range and back into value from yesterday. Now I'm going to chill. Market gold has this tendency to have a big move early and then just chop around, and it's already setting up back in value from yesterday At this moment, very little change in perception of value for an ounce of gold. So if we missed this opportunity this morning, it's okay. Maybe this market is beginning to wake up a little bit. We see one of the best opportunities off the open here this morning than we've seen in weeks, it feels like, in gold. So maybe the market is starting to open up a little bit. But again, if you miss this move, try and stay patient. Wait for something to come to you. Wait for the market to tell you something. If you go looking for trades, you're going to find them. They're probably not going to be that good. The euro. So the euro gets another boost towards the upside and another test of weekly kickoff high, maybe this time in regular trading hours. My brother Rick called the low last week here, says this is too cheap. We got to buy the euro. Well, your ECB rates, they raised rates by 50 basis points. Draghi quit. Anything can happen. The dollar's been getting a little bit hit today. Let's see where it is now. Yeah, it's still lower, about 0.5%. So, here we are. We're testing that weekly kickoff high. What are we looking at as far as inventory is concerned? Overnight inventory was long, flattened out. This was, the 730 bar, so we're already open there. And testing where to? Right back to weekly kickoff high. A test, a test, a test. There's a pile of sell orders up here. The more often we test that pile of sell orders, the smaller that pile is going to get. There's going to be a winner here at some point. Either buyers are going to win and turn this market higher, or those sellers are going to kick their heels into the dirt and they're going to win if this market continues to move lower. We're at a very pivotal area here with weekly kickoff high. 1, 2, first test of it in regular trading hours. That's going to be somehow significant. The 10-year. Yawn. Minor support at last week's low. We did test down below it after the numbers came out today. Breakout rules will apply from that level. We did not find new business down there. We didn't bring in any participation, so we've rejected it, at least for now, below last week's low. Of course, eye on the ECB, and there's 1 week to the FOMC meeting. People are probably going to be hedging, positioning themselves for anything that they may be looking at as far as volatility off the FOMC meeting next Wednesday. Here's the 30. All right. So yeah, the market kind of tested down below that last week's low. We've tested this naked point of control in regular trading hours. I can take that off now. Back in range, back in value. We did open outside of range and value, so the reacceptance of value could bring a value area special situation play into light here. And this is a new opportunity. This is probably one of the bigger opportunities that we've seen in this market for a couple of weeks at least. So if we reaccept inside value after opening outside, there's a good probability that price could reach the other extreme of value at some point during this session today. Could be an all-day sucker. We could, and then, reacceptance inside value is very subjective. The way I learned it, I needed 2 30-minute bars to close back inside the previous day's area of value to mark acceptance. Sometimes that's a little bit too long. You're going to miss your opportunity. We've got one close inside value. Are we going to close this bar inside value? If that's the case, then I'll start to look to buy weakness for a move up to value area high. If we can't hold value, that may negate the validity of that trade. A move in the opposite direction could be of benefit. But I'm really focusing right now, if I were trading this, thinking about, all right, if we stay in value for very long, I'm going to view that as acceptance and try and find an opportunity to limit risk on longs. The natural gas. Nat gas in Europe has hit a 3-week low because the Nord Stream pipeline is back online, so they're going to be getting at least some natural gas. We had that big spike to the upside yesterday. We were speculating on the recap how much open interest we were going to bring in on that. We did bring in open interest, but about 1,900. Don't forget, nat gas is in rollover. Today is probably going to be the last day we're going to be trading the August contract and moving into the September contract. I looked at the volume this morning. There's still about twice as much volume in the August contract than as there is in the September contract, but both contracts are looking very thin and very dangerous today. I would be very cautious trying to trade that because you're going to see a lot of slippage on any stops. Well, the market opened last night. It's traded back to weekly kickoff high. What is resistance may become support. I know some folks disagree with that, but when we broke out of the balance area for the better part of the week, we ran right through weekly kickoff high and closed on the high. Okay? We have a late spike. We did have a late spike, and we closed on it. Now we're opening below the base of the late spike, which would mark rejection of higher pricing. We've got weekly kickoff high as support down here, but with the rejection of the late spike that happened yesterday with the with European natural gas at 3-week lows, I'm starting to think this excursion, if you will, above weekly kickoff high may not be for very long. But again, be very careful in this market because it is vicious and thin. Vicious and thin. Anne-Marie commenting here, nat gas is going to continue to come in because Russia needs the money. Of course. Thank you, Anne-Marie. Joe and Make Hope Money, can you give a hypothetical on opening range trade because based on evidence, no guarantees? Yeah, of course we can. Of course we can. We're going to be going into Make Hope Money very shortly here, so I'm looking forward to seeing everybody there. We get to spend an hour together discussing opportunities created and decided on by you. I absolutely love this, and I'm going to be very excited to be there with you today. So let's take our advice. Let's take our deep breath. Gotta stay humble. Gotta stay grateful. Gotta stay creative in my trading today. Be kind to yourself and others. Say a prayer for world peace and peace within yourself. And make some money today. Trade well, and we will be in Make Hope Money by 8:20, ready and raring to go. Again, we don't have to trade. On Tuesday we were a little, maybe aggressive, trying to just find something, but that's okay. And we'll see you there. We're going to be looking for a couple of victims to speak and come up with ideas. Of course, you can always type those ideas into the chat, and we will see what we find here this morning in the S&Ps. We'll see you there in just a couple of minutes. If I don't see you, get out there and profit today. Have a good trading day. And just remember, don't carry venom in your veins. Forgiveness is for you. It's not for them. Trade well today.